Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, the 2nd of January, 2024 Bull versus Bear webinar. Happy New Year, everyone. Going to go through a regular run through in here today. We're back into 2024. So good luck with your trading, everyone, as we go into New Year. I'm going to run through, do like the Monday run through, even though it's Tuesday, to sort of look at where we are. We're not going to go into too much depth in here, starting off a new year, but just take a look at, what we've got coming up this week on the data front, today and this week, where the potential flashpoints are for the week. And what are any kind of geopolitical events, macroeconomic events impacting markets as we go into the beginning of the year? We'll have a very quick look at the charts, but really want to focus just on the fundamentals, just to line you guys up for the year. For the week. So let's take a look at today in here. So we still have some holidays around the world in here, but going into today, we already had some European. It's the manufacturing PMI. Usually comes out the first day of the month in here, but obviously delayed because of the global holidays yesterday. So we've had this European PMI data from S&P Global so France, Germany, and the Eurozone. You can see all in green, beating expectations, so positives there. The UK one just missing slightly, but it's a very slight miss. And going into this afternoon, obviously we don't have the ISM data today, but we'll look at the data for the week in a second. But we do get the S&P Global data for the US. Usually these come out, the S&P Global data and the ISM data come out on the same day, but because of holidays and scheduling, they're not on the same day this week. So and this month. So what we'll like to see, this might have a little bit more of an influence today, particularly as we've got a slow news day, as we kick off the new year. People are kind of wanting to get involved on the trading side, the short-term trading side. So maybe we'll see a little bit more volatility than normal from this S&P Global PMI data, because usually 15 minutes later we get the ISM data, but we don't get that at the moment today. So 9:45 Eastern time, watching out for that. But so far today, the data's been fairly positive. If we jump to the full calendar for the week, we didn't put out a macro matters to kick off this week in here. Obviously, with the holidays, we haven't got around to doing that yet. But let's take a look at what we've got coming up in here for the rest of the week. So as we go into today, we've already discussed in here the Eurozone PMI data, and we've got that US data in here this afternoon. As we run into Wednesday, German employment data, that can be important, okay? And then we run into the US data, and then you see in here we get the ISM data, okay? So we've got the ISM, which is the more important data out of the US. We're getting that actually tomorrow on Wednesday the 3rd, so that's at 10 o'clock. So that's going to be significant. And then we also get at 2 o'clock Eastern the FOMC meeting minutes release. So watching out for that. The meeting minutes release for the meeting we had in the middle of December in here, when the Fed certainly seemed to indicate a pivot. So that's going to be interesting. That could be important. So we're certainly watching out for that going into into Wednesday. Okay, so both the ISM and manufacturing tomorrow and the FOMC meeting minutes in here. Moving on into Thursday, European CPI data. We get the French CPI, but probably more important, the German regional CPI first of all. You see all the regional CPIs in here, and then eventually down in here we get the German nationwide CPI data coming through. So that's going to be certainly something we're going to focus on going into Thursday. And then switching across to the US, then we get the S&P Global Service Sector PMI data. So we get the service sectors PMI data from S&P Global. Again, not aligned in here with the ISM data. So that may have a little bit more of and the composite data as well. So service sector and composite data coming out from the US on Thursday. So it's a fairly busy week in here. And then we run through to the end of the week on Friday. Then we get more CPI data, European as a whole CPI data. So that's certainly going to be significant in here. Then we get the always much watched US employment report. So we're watching out for that, 8:30 Eastern time on Friday. And then because of the delay, we're basically one day back. We get the ISM data as well. So it's a really busy week in here across the board. So the two real big standouts, the ones I've got to really flag, first of all, are the FOMC meeting minutes, okay, on Wednesday, and the US employment report. Remember, those two both sit within our tier one data for trade day. So over the FOMC meeting minutes release, where is that? Where are we? Got that? There we go. At 2 o'clock Eastern time on Wednesday, and then the US employment report on Friday. Remember, no trading 2 minutes before or after that data. Okay, no trading 2 minutes before or after the FOMC meeting minutes and the US employment report. But then just to throw into the mix as we go through this week, because they're split by the different, because of the holidays we've had this week, we have the S&P Global PMI data coming out on Tuesday and Thursday, and the ISM, more important data for the US, coming out on Wednesday and Friday. So it's a really busy week. Once we get today really out of the way, I mean, just even today we've got the that PMI data coming through today, but the S&P Global PMI coming out of the US. So it's a really busy week this week, really. And the other thing to point out, and we're not there yet, is the earnings calendar. Now, the earnings season is, we're going to be going into Q1 earnings season. It doesn't really kick off in earnest this week, but if I go into next week in here, I think, but the end of next week, where are we in here? Is it the end of next week? No, it's the end of next week. So we've still got another week and a half to go. But by the end of, so you are getting some earnings coming through in here. But if I do the filter in here by, I'm not sure if I filtered in here by, just the large companies in here, tick the 3 stars in here. Got the US and the 3 stars in here. So these are the larger corporations, importance. If we go and take a look at that, you'll see it's not till Friday that we get we get Delta Airlines on Thursday, but really on Friday of next week, so not till the 12th of January, we get earnings kicking in really in earnest, okay? And it always kicks off with the large financials, the large US banks, so JP Morgan, Bank of America, Wells Fargo, BlackRock, Citigroup, and Bank of New York Mellon, all kicking off the earnings season, not this Friday, next Friday. So that's something for us to look forward to, which can have an impact on the equity indices, which a lot of our traders at trade day are trading. Let's run through some of the headlines, what's going on. So 5 things to start your day. If you haven't been with us for very long in here, so welcome Efran in here. But if you guys, I'm going to just quickly go to show you where to sign up for this 5 things to start your day in here. So you go to the bloomberg.com/markets. Okay, bloomberg.com/markets. I put that into the chat just below where you're watching this now, if you're watching live. On the right-hand side column in here, bloomberg.com/market is the most important market news of the day. You put your email address in there. You get that sent to you at the beginning of your day. There are 3 different editions of this 5 things to start your day. They come out of the European Open, the US Open, and the Asian market open, okay? So depending on where you are on the planet, you'll get it when you wake up in the morning and tell you what's happened in like the last 12 hours, the important events. So the 5 things, this is the US edition. So this has just come out in the last hour. So basically just welcome back, we're back trading, start of the new year. S&P 9-week winning streak, longest winning streak since on a weekly basis since 2004. So continuing to look bullish in here, but we do have this oil is pushing higher, which is potentially a negative. Or higher oil is potentially going to reignite some inflationary pressures, and that's because there's Iran have dispatched a warship to the Red Sea. Okay, so that has then put upward pressure on oil, which can be a negative. However, riskier assets are pushing higher. Bitcoin has gone up through 45,000 for the first time in over 2 years in here. So we're kind of starting the year off, continuing this kind of risk on theme that we've had in here previously. I'm just going to jump back, and hopefully I'm going to go back to our home page in here. You're going to hear me. I'm going to get a bit of a feedback loop. I just want to jump in and open up some of the. So I did publish, even though we haven't published the macro watch, I'm going to go down here, the technical analysis levels in here. I'm just going to quickly open this. Oops, no, that's the. Oh, yeah, here it is. Yeah, I'll close that off now. So this is the we published this. I published this last night in here. So the technicals in here, and despite this kind of setback we've seen in here, to kick off the new year on the overnight, we had this little dip at the end of last year, beginning of this year, on both the S&P and the Nasdaq dipping lower. And I'll come to the charts more in a moment. Staying bullish in here. So this looks like a small correction. You look at the longer term trend line, both there on the Nasdaq and also on the S&P E-mini. We're way above that trend line. So things still looking bullish, although we've had this kind of slight setback in it. So going into the new year for me, still staying bullish despite the setbacks we've had. And that oil data in here probably, or the oil event, excuse me, the Iran sending the warship, is probably not helping matters in here. Dutch maker of chip machinery cancelled its shipments to China slightly ahead of schedule. AML had licensed to ship top three in line, so probably not impacting us hugely in the US. But maybe we're watching ASML as we go into today. Almost a third of foreign said they will increase their China investment. So there's anticipation of a move by China to boost its economy, having been in the doldrums in here for at least the last year in here, and been fairly negative. So there is an expectation, a broader expectation for policy to make more of a positive impact on the Chinese economy from the Chinese authorities, and therefore boost both the economy and the stock market. So there's a positive year being predicted by many of Bloomberg's clients in here. So basically the investment banks really predicting a positive year for China, although we've had a bad start to the year so far. Let's move on to some of the other highlights. So Nasdaq futures drops 1% in here, and European stocks are lower. For Asian markets lower in here, despite the anticipation for China to do well. And Brent crude up. So this has not happened. This does not help matters in here. This is a risk-off event, obviously, heightening risk, pushing the oil price up, and that's negative for riskier assets. And I'm seeing stocks pushing lower in here, and futures pushing lower in here. Nasdaq's down at 1%, and Apple also falling in US pre-market trading after Barclays downgraded Apple stock in here. So that's the kind of negative we've got running into this morning. There's another article on the oil advancing higher. I want to just share this one. I haven't had a chance to go through this yesterday, but this is like the expectations from, hopefully you can see this. I've got a Bloomberg subscription, but hopefully you can see this. This is open to everyone. So yeah, you take a look at this in here. Basically all the expectations for markets from the various investment banks going into 2024. I'm going to get through that later on today. China has tried to stimulate the economy already so far this year. Largest increase in its stimulus tool since November 2022. And China injects 50 billion into policy banks in stimulus push. So even despite doing that, though, if we go and take a look at what happened to Chinese markets, well, the Hang Seng this morning down 1.5%. So starting off on a negative. The Nikkei was down 0.2, and just jumping across to run through where we're seeing markets in here this morning. European markets also slightly lower on the back of that, not being helped by the higher oil price. The FTSE, UK FTSE, the German DAX, and the French CAC between 1/10 and 3/10 down this morning. And as we go into the day in here today, we have the Nasdaq already, as we said, down around 1% in here. The S&P down about 2/3, and the Dow around 0.5% this morning. So just moving through some of the headlines in here. So China injecting the policy, injecting liquidity into the markets in here. Eurozone economy likely entered recession last year. That's looking at that data we looked at just there earlier on. The data we saw out. Hopefully you can snap back in here. No, I'll close the tab. But the data, the PMI data, even though it was better than expected, still indicating that the Eurozone may have entered. We haven't got a positive actual data on that. We haven't got the GDP data to show the recession yet, but potentially a Eurozone economy entered recession. Oil higher. We've already talked about that in here. 500 record in view as 2024 begins in the same vein. Well, it's not actually. It's we've dipped a little bit lower in here, but nevertheless in here, the S&P 500 in sight of its all-time high. Expectations for us to hit that potentially in January. Wall Street looks for a subdued start. Apple down. We've already spoken about that, and Bitcoin pushing higher in here. I'm just going to quickly take a quick nod to the charts in here. Let me just come out of here. Don't want to be seeing all of that. But a quick look to the charts and just a quick look at the equity index in here. You see this significant fall in here by the NASDAQ in here so far this morning, notably lower, taking out some support levels in here, previous lows here and here. I think this is going to be my line in the sand level. We're holding above this at the moment. Want to see us hold above 16,815 and certainly above this low in here. At 16,758. So 815 and 758 are the two important levels. If we can hold above 815, I'd be looking to like buy above 815, stop below 750 really in here on the NASDAQ. Despite this significant sell-off in here, looking for the market to swing back higher as we kick off the new year. But remember to watch that data that we have later today. Similar story for the S&P. It's taken out a couple of data points, took out these supports in here and here around the 47, 97, 96 area. This is kind of my line in the sand in here at the moment. We're just holding here. So, but more importantly, the one below this. So the low here is at 84.75, but more significant, maybe trying to hold this one in here down at 55.5. Okay, so whilst above 55.5, looking to buy for the next swing higher, but do watch out for that data that we get later today. Watching out for that S&P Global PMI data that we're getting later today. That's all I have in here for us in here today, guys. Have a great trading day. I'm going to wrap it up there, and I'll be back with another bull versus bear webinar tomorrow. Take care.